This is Dan Dix here, reporting for Press for Truth, and tensions are continuing to run high right now at Parliament Hill in Ottawa, as the Freedom Convoy truckers are really showing no signs of leaving right now. In fact, more people are showing up this weekend. And meanwhile, at the Canada-US border at Coutts in Alberta, they've temporarily opened up the blockades to allow for certain supply chains to be able to continue. And really, when it comes to supply chain issues and these political tensions, often savvy investors will move their assets into the precious metal space, really as a safe haven, especially in times of high inflation and, as we said, political intentions that are triggering high volatility as we're moving into the Federal Reserve potentially having a rate hike next month. And joining me right now to talk about all of this and so much more is Alastair Still. He's the CEO of Goldmining, Inc. Goldmining.com is the website. Sir, thank you so much for taking some time to speak with us here today, especially in the midst of all this stuff going on in Ottawa and at the border. So this really begs the question as to, when it comes to supply chain issues, how is this going to affect the markets? So maybe we could start with that. When it comes to these supply chain issues with COVID-19, we're seeing industry-wide shutdowns right now, massive restrictions. What's it been like for you, for Goldmining Inc., or just for gold mining companies in general, to navigate this new space in these troubling times?
Well, thanks for having me on today. It's a great question you've led in with. And I guess first off, I can look at it from the perspective of a gold mining operator. The operating companies in this troubling times with the pandemic and inflation, they've actually survived quite well. And I think that's a testament to the fact that the mining companies have some of the most stringent safety and health policies in the world. And they've been able to keep their mines working, been able to keep their workers employed. But what it does also shows is the backdrop we're working in, there's some uncertain times. We've got the concerns over the pandemic, and that's loud and clear in Ottawa and other places. We've got inflation approaching record highs. We've got some tensions in the Russia-Ukraine situation. All of these things traditionally would point to a favorable condition for price of gold, and that would really bolster companies such as ourselves, which has such a large inventory of gold and gold-copper projects in the Americas.
Now, you mentioned the Ukraine-Russian crisis. I know the Biden administration recently pumped like $200 million more into the defense aid for Ukraine, so that's got tensions high. As you mentioned, inflation is still currently an issue. Where do you sit on the inflation debate? Because, some people believe there's nothing to worry about here. Others think that this is moving into hyperinflation. Do you see it as being transitory, or is it more long-lasting and structural?
Well, I think we can all relate to inflation because we see it every day when we go to the grocery store or the gas pump. So it's real, it's here. How long it stays is another matter altogether. But what I would expect is we're going to have some choppy waters before we get into some smooth sailing here. And I think in those troubling times, people like to have a physical asset, something they can have comfort in, put your hand on. And knowing that something like gold, which has a finite supply, there's only so much ever been created. You can't create new gold like some industries. It's a great resource and traditionally been a go-to investment vehicle in these sort of times.
Well, I would agree. It's always been an excellent way to hedge oneself against inflation in any kind of troubling times. But there's so many aspects to it. Historically, when gold rallies, the stock will end up performing better than spot price. What do you attribute that to?
Well, I think it's a simple question of, we're highly leveraged to the price of gold. And for example, at our company, Goldmining Inc., we have one of the largest resource inventories of any junior mining company. We have over 16 million gold equivalent ounces in the indicated and inferred category. We have a further 16 million gold equivalent ounces inferred. And so that's a huge inventory. So a small price movement in the precious metal price can really translate to a significant price rise on our share price.
Well, one of the cool things I've noticed about gold mining, probably the most unique thing here, is that you currently own 20 million shares of a gold royalty company, and that alone is worth half of your current market cap, which really means that your gold resource is effectively worth only $3 or $4 an ounce, which seems incredibly low. Do I have that right? Or?
You do have that right, and I think that's one of the great opportunities for our shareholders and our potential investors is that we have a very strong balance sheet. As you say, it's underpinned by 20 million shares we own in gold royalty. The market value on that is something approaching approximately $100 million. We have cash on hand as well. So a strong balance sheet and a strong inventory of projects and resources led by a strong management team really, I think is an excellent opportunity. And the enterprise value per ounce, which you speak of as being so low, that's really the opportunity as well. We can't necessarily control the gold price ourselves. We'll react positively when it does move, but we can advance our projects, make them well known, make them better understood, advanced, so that we can change that multiple to get it more like a comparable, which might be $20, $30, $40, $50 per ounce. Right. So some significant upside there as well.
Well, you've mentioned before, spoken about unlocking the potential within the portfolio. So what kind of steps have you guys taken to do that, and what would you say sets you guys aside from some of the other kind of major players in this space?
Great question. I think the first step that we have is the diversity in the portfolio. And the experience to have unlocked value. We talked about Gold Royalty Corp. That was only created a year ago. We took small royalties or wrote small royalties on our own assets, created a new company, went to an IPO which raised $90 million. 9 months later, that's almost a $600 million market cap company. So huge growth. They've just also announced their inaugural dividends. We're getting cash flow from the shares we own, and that the 20 million shares is almost $1 million Canadian this year in dividend income. So that's just one example of this past year how we unlocked value. We have multiple opportunities to do that in this diverse portfolio. And one project we haven't even talked about, we also have a uranium project. And uranium projects prices have been high, but they're still only about a third of their all-time high. So we have a 125,000 hectare large land package in the Athabasca Basin, part of the Alberta side of it, which hosts some of the highest grade uranium deposits in the world. So this is a project buried in our portfolio. We're going to try and daylight, see how we can surface it, because our focus is primarily on our gold projects.
Well, let's talk about the uranium a little bit, because I think that's probably one of the most important energy sources to come about in the 21st century. And you guys own a project there, but it's currently not necessarily getting any value from the market. So if you're getting the stock now, you're essentially getting the uranium side for free. Is that right?
I think that's a good way to look at it. As we used the example of creating Gold Royalty last year. We would try perhaps in the future to try and unlock value in that uranium project, our REA project, and that is a free option for people on the price of uranium. And we've compared ourselves, that project, with other projects in that same district, which have much smaller land packages, far less prospective, and they have $50 and $100 million market caps. Mm-hmm. And this is sitting in our portfolio just waiting to be captured value for us.
Well, what would you say so far to date is probably the most exciting catalyst that you've seen so far for gold mining?
Well, I think the gold royalty spin out last year was key, because what it did, it demonstrated, in fact, that the market believed in our assets. They were willing to back those, they validated those assets and created this company, which is growing by leaps and bounds now, as now a 600 million market cap company. But what I can also say is that we've also taken a portfolio, which we've largely treated as an inventory of assets. We've now started to do our own work on those. We've started PEA studies, we've started our own work, and we've just, for example, released our first PEA study on our La Mina project in Colombia, which shows a significant economic returns. It's going to produce over 1 million ounces gold equivalent of gold over a 10-year mine life. And it has tremendous exploration upside. These are the sort of things that we're now starting to crystallize and unlock and make shareholders and investors aware of, so we can raise up that enterprise value per ounce to a more representative level.
Well, it seems to me that central banks are about to eventually raise rates moving forward, and historically, when rates are raised, gold appreciates. So how profitable do you think this can be moving forward, especially in the potential of a currency confidence crisis?
Well, I think the upside is tremendous. And we're at an $1,800 gold price today at 2,000 plus. I mean, our assets look even better. But the other point I would bring out is that about 81% of our commodity exposure is to gold. We also have a significant component of copper in our portfolio. Some 18% of the commodity is through copper. And we all know the copper prices are sky high. They're over $4 per ounce. We don't have primary copper projects, but it occurs as a byproduct on some of our larger gold mine or projects or development projects. So that's another angle for tremendous upside. And as we enter this green economy and push towards electric vehicles, it's not just the batteries they need for those vehicles, but it's the infrastructure to get power to charge those vehicles, which really translates into transmission lines, copper, more demand, and we think that price of copper has some tremendous upside as well.
Now, earlier in the interview, we talked a little bit about the political tensions with Ukraine and Russia, some of the things going on here in Canada. There's so much uncertainty moving forward in the world, and I know you don't have a crystal ball or anything like that, but just from your experience in these troubling times as we're potentially moving into, where do you think you could see gold prices going? Like I said, I know you can't predict the future or anything, but just coming from your experience, where do you see this heading in the coming weeks, months or so?
Well, I think, at the current levels at around $1,800 per ounce, it seems relatively stable. I see no reason why later this year we can't be over $2,000 per ounce. And also, you mentioned these factors that are perhaps driving that price, instability and global crises. Well, that's also the benefit of the projects we have, which are all in the Americas, all in stable jurisdictions, where projects are in Canada, the US, Colombia, Brazil, and Peru, all solid mining areas that we don't have as much risk as some companies who are operating in some of these more far-flung regions of the world.
Yeah, well, I know a lot of viewers of this channel are some of those savvy investors that we spoke out in the beginning who are moving their assets into the precious metal space as a hedge against all these troubling times that we're seeing. So where right now is the best place to go online, would you say, if people want to learn more about you guys? Where's the best place for them to go?
Absolutely. Our website spells out all our projects, our plans forward, and our teams, and it's very simple. It's www.goldmining.com. We are actually listed on the Toronto Stock Exchange and the New York Stock Exchange. The New York Stock Exchange, GLDG is the ticker symbol, and the Toronto Stock Exchange, it's super easy, GOLD, gold.
All right. Well, it's certainly, I would say, exciting times to be involved in this space. So many ways this can go, especially, as we said, we're moving into a great deal of uncertainty in the world, right? Any final thoughts on just the current state of the market and the world, and where you'd like to see gold head in the future?
Again, just to reiterate, during these uncertain times, I think we all clamber for something we can have comfort in and has historical value and knowledge, and that's where I'm excited about gold. We have one of the top portfolios around. We have a top management team with a very strong balance sheet. It's the perfect combination to ride this out in uncertain times, and if price goes higher, we are set for some tremendous growth.
Yeah, you're well positioned right now at a very good time. So once again, I want to encourage people to check out those links in the description. Once again, thank you so much for taking the time to break this all down for us today.
Pleasure being here. Look forward to speaking again in the future.
We all want truth. The truth will set you free.